assist you. This session is also being broadcast live on platforms like YouTube and LinkedIn Live, so you can access the information on those platforms as well. Momentarily, we will be joined by our host for this afternoon's event, Biz2Credit's CEO, Rohit Arora. He has been named one of New York City's top entrepreneurs and is one of the country's top experts on small business finance. And he is also the leading expert in small business credit underwriting and has helped Biz2Credit become one of the top finance companies around the country over the last 10 years. I would now like to introduce Rohit, who will introduce our speakers for today's session. Rohit, are you there?
Yes. So thanks for the opportunity, and I would like to welcome Congressman Smucker, who is in Congress from 11th District of Pennsylvania. And what we are discussing today is something very important about making 199A into a permanent feature in our tax code. And since we are at the start of the tax season, we have also assembled a great expert panel, including a senior guy from our partners, Block Advisors. He's the lead tax strategist for Block Advisors, who are one of the largest small business tax filing companies in the country, part of H&R Block. And the idea is that we can help our small business constituents to get a better idea about what is coming up. That will be great. So first of all, as I said, we are fortunate to have Congressman Smucker with us, and I would like to welcome him again.
Thank you. Webinar. Sorry about that. Sorry. There we go. All right. Well, thank you so much for hosting me here today. I'm pleased to have the opportunity to join you. Pleased, obviously, with the work that you do to help foster the small business community, help grow the small business community, you drive their economic growth. I was a former business person myself, so fully understand the need for access to capital, but also the need for tax policy, the right tax policy that drives continued investment in businesses, in their employees, and in their communities as well. And then I think one of the other things that's really important is the regulatory environment. And I think we're going to be making progress in each of these areas over the next few months and throughout this administration. As I said, this administration is I think a consequential moment for us to create an environment that sets the right stage for businesses of all size to grow the economy. I think that economic growth is critical as well. I think a lot about the debt, and having stronger economic growth will help us to address the deficit and the debt as well. But specifically on tax policy, I serve on Ways and Means. I'm also vice chair of the Budget Committee here, but specifically on tax policy, we've been over the past few months the chairman of the Ways and Means asked Republican members to lead tax teams that held roundtables and used other venues to hear from small business owners throughout the country. And I specifically was tasked with the tax team that addressed small business issues, specifically 199A, the 20% deduction that most small businesses enjoy today, as well as access to capital. So we heard a lot from businesses in my district and other districts throughout the country about the importance of these provisions to incentivize continued investment and growth in our small businesses. I also lead the Main Street Tax Certainty Act, which would make the 199A deduction permanent. And I think that permanency is really important as well. One of the messages we hear and from my own experience in small business, it's important to be able to plan ahead to understand what the rules are going forward. And so I think permanency would be an additional driver of investment and growth that is so important. So it's a top priority for us as we go into the next few months. We are actually hoping to pass our budget resolution on the floor of the House today, which will then begin the process of the committees during their work, and hopefully have a reconciliation bill that that we'll be able to pass on the floor in the not too distant future, hopefully within the next month or two. But you know, if we for some reason didn't get that done, we would be seeing with the provisions of the Tax Cuts and Jobs Act that are expiring, we would be seeing the largest increase ever on American families and on small businesses. And I think my concern would be with the pass-throughs, the small businesses suddenly facing this higher tax rate. You'd have an uncertain future for many communities. We know that when small businesses thrive, those communities thrive as well. And so it would affect our economic growth, would affect, I think, our job creation. So this is a really important opportunity or time for us to continue to reinvigorate that growth and to shape a more predictable tax code. And it's one that we should certainly get done. It's an opportunity that comes along maybe once in a generation. So I'm looking forward to our discussion, and I'd like to thank you again for having me.
Excuse me, it seems like we're having a technical issue. Congressman, give us one moment. We have a microphone issue on Rohit's end.
Okay.
Oh, okay, yeah, sorry. There was a...
No problem. Thought maybe it was me, but...
I know. So I think this is great to set up the Q&A session, because we have curated some questions from small business owners, including from some of your constituents also, because as we have businesses across the country whom we lend, and one of the big questions has been that what economic impact do you see, especially in job creation as well as lowering the tax burden, because last 4 years have been pretty intense for small businesses with COVID, inflation, increased regulatory burden that we have seen. That how do you think this could happen, especially now that small businesses are going to be the biggest engine of job creation as federal government cuts back on their jobs?
Sure. So let's go back to the Tax Cuts and Jobs Act, and of course a key component of that act was reduction in the corporate tax rate. We did that to be more competitive with corporate taxes across the world. And so we created a better playing field for the big companies, the C Corps. But that put us in a position we had to ensure that the smaller companies, all of the pass-throughs, the S Corps, LLCs, and all the rest, were in a position to be able to compete again on a level playing field with those large companies. Because remember this, small businesses, pass-through organizations account for, they're about 95% of all businesses, and they account for about 63% of all private sector workers. So they have it's a large share of our economy. And so ensuring that 199A remains in place, not only because the corporate rates does not expire, so not only ensures that they can continue to compete, but it ensures that they're going to be able to continue to grow at a faster pace, continue to reinvest in their communities, as I had mentioned.
And in terms of the larger tax landscape, how do you see 199A fitting in, and also what kind of any reforms or any modifications, because this has been out there from 2017 onwards. So what you guys have learned, or something that it can be reformed or it can be made better while we make it into a permanent stuff. And I can tell from my own experience, I have so many business owners who are S corps, and for them, this is one of the best things that has ever happened to them, in terms of the tax deduction. And it also, in my view, it simplifies there's a lot of their, like the way they file their taxes and everything. But in your view, what reforms, modifications, or adjustments you think this new bill will bring to the current, scenario?
Sure. So I think there's a few directions we could go with that. Overwhelmingly, I think most business owners agree with what you just said, that this has been vital to their business, vital to their growth, vital to their, continue to be able to reinvest, and that it's working pretty well. And so I think the primary goal here is extension of the current 199A and hopefully making it permanent. And in fact, even if we can't make all provisions of the tax code permanent, and we'll see, we hope to accomplish that, but all of the provisions that expire on the personal income level as well, hopefully we can make it all permanent, but certainly 199A is at the top of the list for permanency. And that is also underscored by the number of co-sponsors that we have on this bill as well. It's one of the top 10 co-sponsored bills out of thousands of bills in the House right now. I think we're at over 170 co-sponsors on this bill at the moment, which shows the strong support. So if you're talking tax reform, this is probably one of the top priorities, if not the top priority, because people understand the impact on the communities. Yes. But back to your question, I've heard that the form itself can be complicated. So, like, is there a way that we can make that easier to fill out? I don't know, but certainly I would if there are efficiencies there and we can simplify it, I think that would be better. There are also there are some industries, particularly high labor industries for the owner, that are not included, and we've heard concerns about that from individuals. And so those probably be the two major inputs that we've received in regards to potential changes. So I don't know whether we'll be able to address either of those, but those would be some of the areas that potentially would be changed.
So that brings me to my next question, which you already highlighted with some of the industries which have high labor. So in the services industries, we have also seen that there has been a limit above which income this whole 199A gets phased out. So do you think this phase out that income threshold should be increased, because with the way inflation has gone up and over the years, and is there a provision to index it to some CPI stuff, or is it going to be like more of a hard number that just stays there over time?
Yeah, I think indexing that would make a lot of sense, just as we have indexing provisions in a lot of other bills that we do. It only makes sense that we do that. And so all of these changes, by the way, we have to consider the cost impact, and these will be all the changes we make will be scored by CBO, and we'll be looking as we extend provisions in the tax code, we'll be looking for ways to pay for some of that. And so it'll certainly be talked about. The next step in terms of the Ways and Means Committee, which will be writing the tax code, there's an instruction that comes from Budget Reconciliation that starts the process. And so we will be having multiple meetings with the full Ways and Means Committee to sort through some of these potential changes, or at least with the Republican side of the Ways and Means Committee, and we'll be sorting through some of these changes. And so having that kind of input is important, and certainly we've been talking with constituents and others about potential changes like that. But I think indexing is probably a good idea and something we should consider.
Okay. And in terms of, since these changes are or this bill is gonna make it permanent, so what I'm hearing from you is that there's a lot of support in the Congress.
Absolutely.
And is the support bipartisan or mostly Republican right now? And what do you think are the chances of bill getting?
There is bipartisan support. many more Republicans than Democrats, but we do have a few Democrats on the bill as well, which I think bodes well for the bill. Just shows how strong the support is for that. And just for those who may not know, having co-sponsoring a bill means that you support that bill and are working to have that bill passed. And so we are almost, it would take 218 to be at a majority, but we're getting fairly close to that. Having 170 co-sponsors on a bill is fairly unusual. And so I think the chances of this being included are very, very high. I would bet on it if I would bet on this, but I think we'll be extending 199A. Whether we can make it permanent or not is yet to be seen, but I think there's a good chance we'll make that permanent, as we should.
And as we have talked about, the tax codes can be extremely complicated to understand, especially for small business owners who are so busy running their day-to-day businesses. They don't have a lot of support from accountants and tax consultants. So how do we make it simpler for them to understand the provisions, get more out of these provisions, and also, when they're filing their taxes and getting these deductions, as you said, they're trying to simplify forms, but are there other things you're thinking of using technology, digital data and everything to make their life easier?
Yeah, we should be looking at that. And I don't know that I have specific answers on that today, but this is where your input, your continued input in this will be very, very important. I fully support the concept. We have to be finding ways to simplify it as much as possible, which is true for any regulation. I mentioned earlier, I really do understand. I owned a business before a construction company before I first served in the state Senate and come here, but I own another small business right now that I continue to operate, mostly absentee, but have seen the impact of regulation on the ability to grow a business. And so anything that we can simplify, whether it's through technology or just simplifying the system, simplifying the forms, whatever it may be, I'm all in. So we just have to figure out whether there are ways that we can do that specifically for 199A, and we will certainly be doing that now as we get to the point where we're literally writing the rules on this. So we'll be looking at that, I can assure you.
The next time I'm in DC, I will set up a time to meet you.
Oh, that'd be great. Let's do that.
Exactly.
I would very much like that.
Yeah. And any other small business bills you're working on, or your committee and everybody, because small businesses are very keen to understand how much, obviously they are very big supporters of Trump administration. We have seen it now, but they're also very optimistic about the fact that this administration is going to really help them to turbocharge their businesses, reduce the regulation, and also make them more competitive, actually.
Sure. There's a lot. Because I serving on Ways and Means and on budget, also having the business background that I do, I think there is so much that we can do to ensure that we have an environment where when an individual is willing to risk their savings or whatever it may be, and to reinvest in their business, risk taking out a loan to reinvest in their business, they should be able to reap the reward, and we got to make that as easy as possible. And so there's multiple bills that I've worked on. One of the big problems that, probably the biggest problem that I've heard from business owners, it may have dissipated just a little bit, is finding workers to fill positions that are available. That for me in construction, we were a fairly labor intensive commercial contracting. And so we had several hundred employees, and our growth was more limited by labor than any other thing. We would bid on jobs based on the amount of labor that we had available at that time. And so, and I mentioned thinking about the economy, growing this economy, helping to solve the debt problem will take a robust growth in the economy, more than we're experiencing right now. For that, you need workers. And we just simply demographically do not have enough workers to fill the positions that are available today and the positions that will be available tomorrow. And so, several areas where I've worked to try to resolve this. One is thinking about how we prepare folks who may today be working age but not participating in the workforce. You have millions of people. Our workforce participation rate is low as compared to what it's been historically. One of the lowest points ever. And so we have probably millions of people who are potentially on the sideline. We need their talents, and they need the self-worth and the benefits that comes with a job and getting on that ladder of success. And I feel like at times we don't do a very good job of connecting the individuals who could benefit from a job or are looking for work with the millions of jobs that are available today. And so to look at our education system, I'm a fan of career and technical training, of apprenticeship programs. And I just think we have to continue to highlight those and sort of rebalance where federal resources are going. We've for too long focused only on the 4-year degrees, the baccalaureate degrees, which I would never discourage. But we have to understand that there are a lot of other great avenues to the workforce. And so that's one area of focus. And then secondly, there's a lot of talk about closing the border. I think the president was elected to stop the flow of illegal immigrants coming across the border and has done amazing work in the first month. It's almost stopped it altogether. But we also have to understand that we need legal immigration.
Oh, yeah.
And I hope that we get to that point where people understand that immigrants, we're a country of immigrants. We should welcome people into our country who are willing to come through the system legally and who want to live the American dream, want to provide for their families. That's who we are as America. My message to the administration recently has been, absolutely, we have to close the border. We really can't do much on immigration policy until the American people see that the border we have operational control of the border. We're going to be there pretty quickly. But then we need workers. And so I have a bill that I've introduced in the past few sessions that would create an entirely new visa program. We already have H-2B, which is accessed by some of the farmers in my district. That's seasonal. We need workers in construction, my old business, and in the hospitality industry, healthcare. We need workers all over the place. And those aren't seasonal jobs. Those are year-round jobs. And so the bill I've introduced and hope that we get past this session would create a new visa program for year-round workers. It starts with a low number, not nearly enough, but the idea was we should at least get this thing off the ground, see how it works, and then go from there, and then increase the numbers as we go forward. So that's just two bills that come to mind in regards to, I think, addressing some of the major issues that businesses are facing today, other than the tax code.
No, and I think that's a very apt point, because as we talk to a lot of business owners, right now, one thing on top of their mind is how will they find workers, because our legal immigration system is broken in this country right now. And being a first generation immigrant myself, I can relate to it, that how tough it is to come to America in a legal way and get all your stuff done.
Absolutely.
So I think we have to stop illegal migration totally, 100%, but also reform our legal immigration system, in parallel.
100%.
Now my last question, thanks for all your time, is that if the small businesses want to reach to you or want to give you some feedback, what is the best way to do that, actually, and where should they?
Sure. Just you can call into any of my offices. You can email us. There's information on the website. Our website is smucker.house.gov. Okay. Welcome your input, and let us know what you're thinking. Let us know how we can be helpful. You can also follow the work we're doing on social media. It's at rep.smucker, I think. You'll be able to find this, but there's multiple ways that you can stay in touch with us, and we would welcome that.
Thank you for your time, and best of luck for getting the bill passed, because I think millions of small business owners are like waiting with bated breath on that.
We'll get it done, I believe. I'm not quite sure yet whether we'll be able to round up the votes today, but if not today, it should be pretty quickly. We hope so.
Sounds like a good plan, and we look forward to seeing your next bill, which is going to be the new category of visas, worker visas.
Thanks for having me.
Thank you. Thanks.
Have a good day.
Yeah. Now, I would like to welcome our next guest. He is Carl Breedlove, and he's the lead tax assessor, researcher and assessor at Block Advisors, which is part of H&R Block, and Block Advisors is a close partner of Biz2Credit. We are very proud to work with them very closely, and as we get into the peak tax season, we thought of bringing somebody of Carl's caliber to talk about 199A, and then what are the things that can be done with the eligibility criteria also. And Carl actually speaks at a lot of conferences. He's a thought leader at H&R Block, and he also advises public around the tax law issues. And these are very important things right now, because we really need to get prepared for if this bill goes permanent, as we heard from Congressman Smucker. And we also need to understand that what other things are happening in the world of tax laws that can help small businesses to get better, smarter, and more profitable.
We're just checking in with Carl. Mr. Breedlove, are you able to hear us and speak?
I'm good. Thanks.
Excellent,
for
sir.
What's that?
Please proceed.
Okay, sorry. Thanks for having me. I think this is a great topic for people to hear about. I actually cut my teeth on the Tax Cuts and Jobs Act when I first got out of law school. So this is my go-to area. And we have a lot of small businesses that we handle at Block Advisors and H&R Block. So this is perfect for our clientele, and I'm glad to be able to kind of talk through it.
Yeah. So my first question would be that from eligibility perspective and requirements, if the business wants to qualify for 199A deduction, are there any nuances related to that by manufacturing business versus services business, and from where they can get more information around this provision in the tax code, and how they can take advantage of it?
Yeah, so for who qualifies, this is about the only thing in the section that's fairly simple, and it's just that, as the congressman said, it's pass-through entities. So we're talking about sole proprietorships, S corporations, partnerships, and then if your business is an LLC, if you're taxed as one of those entities, you would also qualify. And then there's some estates and trusts that own interests in businesses. They would also qualify, and that would be an intermediary pass-through entity in essence, because the beneficiaries would be likely getting the deduction in some way, shape, or form. So those are the types of entities that qualify. There's also some special rules for real estate activities. The IRS created a safe harbor a while back for folks that have certain rental activities so that they can qualify as well. And as far as your kind of nuances, the main thing that is kind of different is whether you have a service business or a non-service business, as you've alluded to earlier. And the reason that's a nuance is because your service businesses, not only are there wage and property thresholds like there are for everybody else, once you hit the top end of the threshold, which for single filers, it's for 2020, that's 191,950. And then for single filer, or for married filing joint filers, that's 383,900. Your deduction actually phases out completely. And those numbers are the individual owner's taxable income. So it's not the business's taxable income, it's your personal taxable income. So you could run a newer business or a business that's lower on the revenue scale and be well under those numbers. But if you have a lot of income outside of the business, that could seriously affect your ability to claim the deduction if you're running a service business. So I'm sorry, those were the lower thresholds. The upper thresholds are 241,950 for single and 483,900 for married filing joint. So when you're in between those numbers, it phases in. But so making the distinction between what your business does is very important for this deduction. And so it begs the question of what constitutes a service business for this deduction. And it's a very broad list, but the gist of what we look for is the performance of services more than incidental, or in reality, is it the primary activity of the business? So, a personal service business, that obviously is a service business. IT professionals, those are generally service businesses. It could be a little confusing if you're providing products, but generally what you do is a service and, providing consulting and things like that. Whereas things like a retail storefront, those aren't. So you have to look at what your business is primarily doing when you make this determination. And then the last little thing here is that at the beginning of this, back in 2018, there was a lot of discussion about consulting businesses because it wasn't entirely clear, because that was not specifically called out. And the IRS later put out some information classifying consulting businesses as service businesses. So if you're one of those individuals that maybe you retired, or maybe you left your day job and you just do consulting stuff on the side now, or that was your go-to, that makes you a service business. So knowing where you fall there is very important.
No, very good point. One big question that small business owners ask us about, how the qualified business income is calculated, because this whole deduction is based on QBI. And then what type of incomes or deductions, should one pay close attention to that might impact that calculation?
Yeah, so Congressman mentioned the form earlier, and that form he was talking about was
Yes.
Form 895. And there's two versions of that form. The regular Form 8995 is for your simple businesses where the owner's taxable income is less than those thresholds I mentioned. So if you're below that lower threshold, you could just use the 8995, which is a fairly simple form in terms of this deduction, because none of the phase outs and limitations are taken into account. And then Form 8995A is the more complex form, and it is used when you exceed that lower threshold. So when you're phasing in those wage and property limitations, you have to use the more complicated form. And that's really the one that he was talking about, with a lot of folks have problems with, because it's very complex. And I'll get in here a little bit on why it's complex. And it's, QBI is really made up of two components. You have your 20% of the qualified business income, which is the net amount of all the income, gain, deductions, and losses from your business. And you only consider income effectively connected to the U.S. portion of the business. And the second component is 20% of any real estate investment trust dividends and any publicly traded partnership income that you have. And so what you do is you add those two things together for every business to come up with a total. Now, generally, you have to do it business by business, but there are some aggregation rules that you can take advantage of. And sometimes that's a positive. And then you compare that to what is 20% of your personal taxable income net capital gains. So you take the number from your tax return for all of your income, and you pick the lesser of the two, and that's your deduction. So that's the simple part, which again is why a lot of folks think that we need to work on this, because it's fairly complicated when you have all those things. But then you have all those limitations, and we'll talk about those in a few minutes, but those really come in and make things complicated. And then there are some other deductions that we have to take into account that when you're looking at your taxable income, you actually take these things out, and we have to put them back in when we're doing these calculations. And so one of those is the 1/2 of self-employment tax deduction that you get. Another is the self-employed health insurance deduction, or CHID. And then the last one is any deductible contributions to self-employed retirement plans. So all of those things have to go back in when you're calculating this deduction, because they're part of the business's income, but they're also benefiting you personally. So we kind of have to tangle them back up after we separated them out. And losses are another huge thing for this, because if you only have one business and that business has a net loss for the year, you have to carry that loss forward and offset any future qualified business income. So let's say you had a big loss this year, but next year when you calculate your deduction, your QBI is actually pretty good. Unfortunately, you're going to have to reduce that by the loss from the year before. And then this kind of is piled on when you have multiple businesses. If you have one that has a loss, that one loss is going to proportionally reduce the QBI from each of the other businesses. And then if there's any left, if say you had a big enough loss that it eats up all the others, you would then carry that remaining part forward. So losses are a big deal. You need to really take those into account when you're doing this, because they can really throw a wrench into things. And so, yeah, those are all kind of the special things. And this is kind of why we say you talk to a tax advisor, because there's so many things to keep track of.
Yeah, no, I think that's a very valid point. And if can you provide real life examples or case studies of how 199A deduction has benefited businesses similar to, like, consulting or manufacturing, and what are some of the common challenges or misconceptions that those businesses have encountered in your view?
Yeah, so so many things go into this that I thought that it would be a good idea to just kind of to give you some basic examples. These aren't real life examples, because again, there's so much that goes into it that we could be here all day. But
yep.
If you look at an individual whose taxable income is below that first threshold, so let's say their income is $150,000, so that's their personal income. Their QBI from their business that they run, will say it's $120,000. So when you look at that first component, the QBI component, 20% of his $120,000 is $24,000. So then we have to compare that to what's 20% of his taxable income. Well, here that's $30,000. So in this scenario, the QBI component is less, and he would get a pretty good deduction. He'd get a $24,000 deduction. None of the limitations that we'll talk about come into play here, because he's below the threshold. And it really doesn't matter what industry he's in, since we're below the threshold, whether it's service or non-service, that doesn't have an effect. Now, if we make it more complicated and we say you have a married couple who has taxable income of, say, $500,000, and we'll say the husband has a side business, and that side business brings in $100,000. But he didn't have any wages. He didn't pay anybody. It was just some consulting work that he did. And he did have some property. He had an office, and we'll say the basis of that office was $40,000. So, normally what we do, like we said before, is we take 20% of the QBI, which here's $20,000, and we take 20% of the $500,000. And so that would be $100,000. But because that taxable income for the couple is above that lower threshold, and at the time I did this, it was above the upper threshold as well, we have to do the limitation calculation. And here, that is going to have a huge effect. So the limitations, the first one, we take 50% of wages the business paid. Here we know that's zero. So 50% of zero, that's pretty easy. And then you take 25% of wages plus 2.5% of the basis in property. So for this, that'd be $1,000 because it's just the 2.5% of 40,000. The unfortunate thing is that limitation amount, $1,000, is the lower number of QBI taxable income and the limitation. So the married couple's deduction for this year would only be $1,000. And that's a huge difference. It's a $19,000 that they're losing out on because they didn't pay any wages. And their property, they didn't have a ton of it. So when you're looking at things, wages are not only important as a tax deduction just for the wages, but they're also important for this deduction if your income is over that limitation, because it can severely hamper your ability to take the deduction.
No, thanks. I think that was a very good example, and thanks for all the inputs, because as I said earlier, the tax codes are always very complicated, and for small businesses, trying to understand them is not easy. But I think with a tax expert like you, I think that's where Block Advisors is trying to make it easier, and also a lot more, I would say, smoothened in terms of claiming these tax deductions. So thanks again for your time. I know you took a lot of time out of your busy season has started, and we look forward to seeing that how small businesses can take advantage of this tax code, and also the ability to understand it better. Okay.
And thank you. And we wanted to shout out that we at Block Advisors, we're partnered with Biz2 Credit, and if you should be getting a link in the email to an affiliate link where you could get up to 50% off the cost of your business taxes if you use us. And we, a Block Advisors office, when you're looking for those, if you see one in your town, we have people staffed there all year long. It's not just seasonal for those folks. This is what they do, and they can help you with not only your taxes, but they can help with payroll, they can help with bookkeeping, or any other types of questions. So take advantage of the resource. It'll make your life easier, and it'll keep us happy too.
No, thanks. And I will encourage all my business owner clients to use your service, or at least look at it, because I think that's a very important stuff, accounting and taxation.
Thank you.
Thank you. So I would like to take a few more minutes here before we wrap up today's webinar. I know people are busy and they've taken a lot of time out of their busy schedule. Is that how can one take advantage of your 199A tax savings? I think that's the most important thing. Obviously, it will improve your cash flow, because cash flow, as we know, is the lifeblood of any business. Because you will have more money in hand. If you're paying lower taxes, your amount of taxes you have to pay at any given point of time also reduces. This also helps you to borrow more, because your debt service coverage ratios get better. And also, from a debt management perspective, because if you have some extra debt, which you have borrowed either on your personal credit or on business, you can use this tax savings to pay them down. Obviously, the big impetus we have seen is that when businesses pay less taxes, they invest more. So that we have seen is what the current Trump administration is also betting on, that if they make this 199A permanent, this will lead to more surety about, this tax break will continue. That means that, businesses will be more bullish to invest. Investment means there will be more expansion, there will be more jobs getting created, there'll be buying more equipment, and there'll be a lot more marketing and sales initiative, because businesses are hungry to grow, businesses are hungry to expand, and at the same point of time, for them to do that, if they have more money in hand and they have the surety that this tax act will be permanent, then they can plan not only for this year, but for other years also going forward. Then I think the biggest thing is, is going to be long-term financial projections. I think that's an important piece, that how that is going to help business owners, the 199A deduction. I think the biggest thing is you can plan your different scenarios. If you want to grow the business, you want to acquire a business, your financial modeling, as I said earlier, that a lower tax payment means more money in hand. That also means that your ability to do a higher debt service coverage goes up. That also means that you can also plan for your retirement, both in terms of growing your business, or if you plan to sell your business at a certain price. So that will help you to plan it accordingly, that how much you want to grow the business, what kind of tax deductions you will get under 199A, and then and you can put more money towards your retirement, because the money you save on paying taxes in the business. And last but not the least, I think the biggest thing for any business is building credit, building business credit, as we have said again and again. The biggest thing is you have more money in hand, you can reduce your debt. Even like a lot of time business owners borrow high cost debt. A lot of time they borrow money on their personal credit cards to start a business or grow their business, so they can actually use this money to pay that down. It also helps in credit score improvement, both business and personal, because if you have if your income compared to your debt is higher, that ratio is higher, then your credit scores are better. The other thing is that if you're paying down your debt, that also means that you have the willingness to service your debt, and that increases your credit score, because it's not just the amount of debt, but also the willingness to service the debt, which is equally important. And the third thing it leads to, which we do all day long, is increased access to capital. We have seen last 4 years, especially last 2.5 years, been extremely tough for small businesses in an increasing interest rate environment, increased inflation, regulatory overhang. So I think a lot of small businesses have suffered immensely. And what we foresee is that, now if this becomes permanent, the biggest benefit is going to be increased access to capital. Unfortunately, we are not seeing the reduction in the interest rates as fast as we wanted to see, or lowering inflation. So those are still big challenges, but at least permanency in the tax code will help businesses to again grow, have more money in hand. And what I'm hoping for is that, it also it leads to an increased GDP growth, which means there'll be more demand for the goods and services which small businesses provide in this country. With this, I will again say thanks to everyone, for attending this webinar today. I hope you found it useful. As we are partnered with Block Advisors, so we'll be sending you the link so you can use that. As I said, Congressman Smucker is a big proponent of 199A and the other bills. So if you have any questions, you can reach out to him. And as you know, we are always there at info@biz2credit.com, or you can use our toll-free numbers, because that's what we have been doing for last 17, 18 years, is to service small businesses, help them to grow their businesses and achieve their American dream. And we are fully committed to make it happen every single day here. So with this, thanks a lot for your time, and bye for now till we see you again.
Thank you very much to all of our speakers today on this special event. Thanks to Rohit Arora, CEO of Biz2Credit, who led us through today's session and who you just heard from there. A very special thank you to Congressman Smucker, who has proposed this bill in Congress and will be advancing that discussion in the Ways and Means and Budget Committees in the House of Representatives. And also thank you to Biz2Credit's partners at Block Advisors for participating. and providing their insights on tax procedures and policies and opportunities for business owners. Of course, as Rohit mentioned at the end, resources are available on biz2credit.com for business owners who may be interested in learning more about financial management practices and other best practices relating to their cash management and financial health of their business. You can see the QR code on the screen now, which you can access these resources by visiting biz2credit.com or by contacting our team. A quick reminder to those who are looking for more information, Biz2Credit is hosting more live sessions over the next several weeks with some of our key partners in regards to the economic trends that are impacting small businesses in today's economy. You can get notified about everything that Biz2Credit has coming up by visiting biz2credit.com and subscribing to our newsletter. Thanks to all who attended and joined us on our live streams, and we look forward to seeing you again at an upcoming session.